I'll start by pointing out that you've been fairly ecumenical politically. Back in 2008, as I recall, you were an advisor to John McCain, a GOP guy, right?
Yeah, indeed. Ecumenical is the right word, Tyler. Yep.
Okay. Let's get to what you did and why you came to the conclusions you did. What were the various scenarios you looked at? And then why, basically, did you end up coming to the conclusion that a Biden win, along with a Democratic sweep of the House and Senate, would be the best outcome for the economy?
Well, we looked at four different political election outcomes. Biden wins, Congress is split, Senate remains Republican. Trump wins, kind of the status quo, the Congress is split, Senate remains Republican. And then sweeps. Biden wins with the Congress being Democratic. Trump wins with the Congress being Republican. And if you take the two bookends, you know, the Democratic sweep and the Republican sweep, that's where we get to a very different kind of economy at the end of the next president's term. That's the 7.4 million jobs. And just in a nutshell, and you can read the report, it's online, you can take a look. It's there in gory detail with all the assumptions. Three things drive that result. One is Biden has a much more expansionary fiscal policy. That is lots of spending on infrastructure, on health care, education, housing, other social programs. He raises taxes on upper income and households and corporations to help pay for it, but he also borrows money to do it, and it's much more expansionary, which is very important when you have an economy that is struggling like this one with an 8.4% unemployment rate. Second, trade policy. I think Biden would continue to confront the Chinese, but he would do it in a very different way. He wouldn't pursue Trump's trade wars, tariff war. He's been talking about rejoining an adjusted Trans-Pacific Partnership. That's the trade deal between the U.S. and other Pacific Rim nations that excludes China because they don't play fair. And then finally, immigration policy, obviously very different. President Trump has been very restrictive on both legal and illegal immigration. Biden would normalize that, and that would lead to bigger labor force growth and more importantly, in the long run, stronger productivity growth, because immigrants tend to be risk takers almost by definition. They start companies, they innovate, and that generates productivity gains. I can go on, but that's, in a nutshell, the difference between the two scenarios.
No, it boils down basically to a Biden and a Democratic sweep being more prone to stimulate the economy. But you raise the question of Biden's plan to raise taxes on the wealthy, to raise the corporate tax rate back to, I think, 28%. What kind of non-stimulative effect would that have on the economy? Would it slow the economy, or would it really just slow the stock market?
Well, I mean, if that's all we're talking about, you take that in its isolation, you say, OK, I'm going to raise taxes on upper income, high net worth households and corporations. Yeah, on that, that's going to be negative. But of course, you've got to take that in the context of his broader plan. He's using that money there to help pay for all the other things that he plans to do. But even under Biden, you know, when he's out spending that money and helping the economy, the stock market still doesn't really go that far. It doesn't go anywhere because it has to contend with those higher marginal rates on corporations. That's simple arithmetic, right? I mean, if you're going to raise taxes on corporations, their after-tax earnings are lower at the same price earnings multiple. The price of the stock is going to be lower. And so for stock investors, for high-income households that own those stocks, you know, the Biden plan isn't going to land you in a better place than Trump. It lands you in roughly the same place.